Hello traders, Gary Wagner here, just about 9:30 in Honolulu, 3:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. First day of May 2015, and this is the daily report for gold and silver. Traders, one note before we get started on the day. Obviously, we have a new format. We will be launching our new trading service beginning of next month. For those that are interested, stay tuned at the end of the show, and I'll fill you in with more information on that. But first, to the markets. Precious metals closing across the board lower, adding to yesterday's dynamic sell-off. We're looking at gold right now, $1174.50, puts it off roughly $8 on the day. The low is $1166.40 with a high of $1184.40 on the day. Silver also trading lower, $16.11. That's our current print, putting it off about 4 cents on the day. The low $15.89, the high $16.26. More on silver in a little bit. So traders, we are looking at the second day really of lower pricing, and realize that when we have been looking at these markets over the last few weeks, the one thing that has stood out more than anything else has really been this defined trading range that we had. Now, we had these extreme tops up here between 18 and 21, 1221, 1218, but we had the bulk, the majority of the trading range really defined between 82 on the low and about 1212, a little over 1200 on the high. Now, that was up till this week. We had this extreme low that came into the market, so we had 2 days of lower pricing, and that was followed by really the first rally of any sorts. We had 2 days of higher pricing, taking it off of these lows at 1172 and taking them back up over 1200. You can see that right here. But then yesterday's dramatic double-digit decline along with today's $8 lower price, if you notice, has now broken below this resistance line. Very, very simple resistance line, simply drawn by connecting a couple of lows in the market here and then this most recent low here, and determining when it breaks below that. That's our time to sell. We have any kind of follow-through come in Sunday here in Hawaii, meaning Monday in Australia, we're going to issue a sell signal. This is kind of what we've been waiting for, and I'll talk to you about our projections and our basic goals as to where we think this market is going. But in essence, what we're looking at is as following. As you notice, we do have Elliott Wave, this being our major intermediate count on the screen. We've gone through this, but in essence, as this market came down, we are in a bear count. This is a long wave 3, a wave 4, then a wave 5. Then we go into our correction, A, B, C. Of course, correction in a bear count is going to be to the upside. And then we started to meander lower. And so what we're looking at is our waves 1, waves 2, and then our wave 3, culminating at this low at 41, which took us into a wave 4 corrective period, which is this. Now, in terms of a wave 4, you typically are going to look at the market going anywhere between 50 and 75% that of this wave here, which begins from here to here. Our fib retracement, of course, is drawn from the top of this line. So you want to move these down just a little bit so you can see that it absolutely exceeded going into 50%, didn't quite get to even 61% in terms of this move back up. But we do believe that there's a good opportunity here that as we traded sideways, we were just ending our wave 4 and are now in wave 5. If that's correct, wave 5 projected should take us at least back to these lows at 1141, and that would be our initial target for a completion of wave 5. Now, this is yet another way to look at it. This is also a daily chart with our Elliott wave count. However, the big change on this is done with a Japanese average chart. And the interesting thing about doing it, of course, with the Japanese average chart is we're looking for points in time where it will really match up. In other words, if you notice here at the top of A, you go right and have that pivotal doji candle and then go red. And so you can really distinguish, for example, 3 red and then it goes to green. So what we're looking for is an alignment of the tops of these markets in terms of the Japanese average correlating with the Elliott wave count. Now, in order to be able to do an Elliott wave count on multiple markets, and I'm following right now about 20 different markets, and that's going to be part of the trading service that we launch next month, because what I'm looking for is not necessarily the to be trading gold or silver, although we'll always focus on that on the gold forecast, but we're looking for trading opportunities for extreme trends that develop in the market. And in order to do that, I have brought in a little bit of help. I'm using Advanced Get, and what I did over the last 4 months is I have tuned the Advanced Get, compared them to my hand-drawn charts until I had them match, and then I watched to see if they would number it in the same way that I would number it, and I was quite surprised to see that was the case, and therefore I am now integrating that. But when you look at that and you combine that with the Japanese average charts, you can really see points in which they line up. Now, as I said, in terms of my target right now, I do believe we will see lower pricing. If in fact we get this break, and this is the break that I was looking for in this area right here, but if we get that break, of course, traders, I believe we should see the market go at least to 41, if not break to a lower low. Now, this, of course, is a short-term view. And traders, this is yet another way that we want to kind of look at this market back to standard candlestick format. Simple moving average, that is up here. I believe I've set that to 14 cycles here, 14 days. I have our momentum index and MACD, because of the Western technical indicators, and traders who've been with me for a while, you know predominantly we're using Eastern studies such as candlesticks, Japanese average. We're also using Elliott Wave and Gann and Fibonacci, which to me is really the old school techniques that one really needs to use, and combining them. But these are the two studies that I really like, and we can see on the MACD that is absolutely going to a sell signal. However, momentum has been really mixed, and you can see it's mixed when we go sideways, because what happens in momentum is you'll see this momentum index grow as we get a defined rally in the market. You can see that right here. And then when we get a sell-off, it does lag. There's no doubt. It is a lagging indicator, but you have momentum then coming down into that negative territory. So right now we're in that real iffy stage. We haven't really built any kind of real momentum. And when you look at this and compare that to other points in time in which the momentum looks like that, you'll see that we're really looking at a sideways market. It's not to say that we're not convinced that this market's going lower, because all of the technical indicators are pointing to that. My sense is I want to have a defined breakout, really, that gets us out of this muck, this sideways trading range that has been so prevalent through all of last month. So as I said, we are looking to issue a sell signal. That'll happen on Sunday or Monday, based upon any kind of follow through within the marketplace itself. So traders, we are looking at a similar scenario in silver. We have a daily chart with fib retracement as well as our current Elliott wave count. And our Elliott wave count looks a little bit different than gold. Of course, both markets are reacting differently, but in essence, what we're looking at in the same way, we had the waves 1, 2, we had this bottom 3. Wave 4 is much more clearly defined, and we are in 5, our target on 5. This target right here is a 75% retracement, 75% retracement of this dynamic move. This, of course, being right after Thanksgiving when we saw the market make that extreme low up to these highs above 1850. When we do that, our 61% retracement is here. We're well below that in terms of a low that we've hit. But traders, if you notice, this is pretty much where we're closing just above this point right now at about 1614, so just above this. Break through this line, our basic target is going to be around 1510 to 1525, and that, of course, is based upon our studies. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. For those that want a little bit more information on our new service, stay tuned. Traders, I'm really excited about the new service that we will launch first week of next month. That, of course, is June 1st. And just a little bit of background. When I started the gold forecast back in 2009, I started this particular newsletter because it was my belief that we were going to see a dramatic breakout, a dramatic upside move, and we were going to see a dynamic trend develop in gold. And of course, we absolutely did that. We watched the market move from $800 all the way to $1,900, profiting all the way. We've had the last couple of years having this market really move sideways and down, and we've still been able to profit, but certainly the kinds of profit, the percentage gains haven't been equal to what we saw when this market was running. And my sense is that in conjunction to the gold forecast, because this is always our primary service, we have developed a service which is basically looking at trading opportunities, extreme trends developing in the market, and then trading those markets. Because the fact that gold has moved sideways and we haven't had other vehicles to kind of park our money in as we waited for plays to develop in gold was something that caused me a lot of sleepless nights. And so I want to develop a service that allows us to take advantage of these other markets. We will, of course, be trading the mini S&Ps. We will be trading the mini NASDAQ. We will be looking at crude light, also trading that. Currencies are really going to come into perspective. We'll be trading the euro dollar and the yen. But what we're looking for is trading opportunities, points in time in which we have an extreme trend. This will be an add-on to the gold forecast. For those that are members of the gold forecast, it's going to be dramatically reduced in price in terms of entry. As we develop this all through the month, you will have parts and parcel of it. It will be included in the fold of the gold forecast until we do our launch in June. For those that want to sign up, there is kind of an early bird special that will be available. Send me an email, Gary@thegoldforecast.com. Let me know that you're interested in trading opportunities, and we'll send you information and a link so you can go ahead and sign up. Have a great day. Have a great weekend. Bye-bye.